In this video, I'm going to expand the accounting equation. Okay. We know that the accounting equation is assets equals liabilities plus stockholders' equity. In this video, we are going to expand stockholders' equity, and we're going to expand it into two components: common stock and retained earnings. Common stock is owner's investment into the company. Let's say that the owner invested $10,000 cash in the business. Well, the asset cash is going to go up. Well, who has claims to those assets? Well, the owner invested that cash, so he gets the claim against it. So we're going to put that $10,000 in his common stock account, and we'll see that a little bit later. The other component of stockholders' equity is retained earnings. Retained earnings is all the past profits that the company has earned, that they've kept, right? And so what is profit? Well, profit is revenues minus expenses. Matter of fact, in accounting, we call that net income. Revenues minus expenses is net income. And all the net incomes are going to go into retained earnings. Well, what's revenue? Well, revenue is amounts earned, and we can earn them through selling a product, providing a service, earning interest, and maybe even earning royalties. Expenses are costs consumed. If you can tell me a business that doesn't have any expenses, then I want in on that scam. When you have a business, every business is going to have expenses. And to get our profit, we have to match our expenses against the revenue. Okay, so anyway, these two, revenues, expenses, is our profit, and that goes into retained earnings. Now, the earnings in here belong to the owner, to the stockholders. So at a certain point, the business is going to distribute those profits to the owners. We do that through dividends. So dividends is earnings distributed to stockholders. We can express this expanded equation in a linear fashion, right? So here we have our assets, which are cash and equipment. And on this side of the equal sign, we have liabilities, and we have one of them, accounts payable. And then we have stockholders' equity. And again, there's two components to stockholders' equity: common stock and retained earnings. Now, notice here that in retained earnings, we have our profit we call net income. That would be revenues, expenses, right? And also, we must have distributed some of those profits to our owners, to our shareholders. That's where we get the $100 in dividends. Okay. Now, we can start entering transactions in this linear equation. One thing to keep in mind when we enter a transaction, there has to be at least two effects on one or more components of the accounting equation, and the accounting equation is always in balance. Consider this: the owner invested $2,000 in the business. Okay, well, if the owner put in $2,000, does cash go up or down? Well, cash goes up, so we put $2,000 under cash. Now, who has claims to that cash? Do our creditors, our liability people? No. The owner of the company is the one that put it in. So they get credit for it under common stock. Okay. So, and remember, the accounting equation remains in balance. $2,000 on this side of the equation and $2,000 on that side of the equation. Now, I want you to consider these 4 transactions to give you a little flavor about what we're going to be doing here. Okay, we've already done this one where the owner invested $2,000 in the business. Cash went up. And who has claims to that cash? Well, the owner does. So we put it under his common stock, right? Now, how about this one? Received $50 cash for services rendered. Well, if the business received $50 cash, does cash go up or down? It goes up. Okay, now why did we receive this cash? Well, we provided service, so we earned revenue. So over on stockholders' equity, we'll increase our stockholders' equity, and specifically under retained earnings, with revenue of $50. Again, on this side of the equation, $50. On the other side of the equation, $50. We are in balance. The next transaction, paid telephone bill, $100 cash. Well, you paid cash. If you pay cash, does cash go up or down? It goes down, right? Now, why did we pay this cash? We're paying our telephone bill. So that's going to be like telephone expense, right? So over here, we are going to reduce our stockholders' equity through retained earnings with an expense of $100. Again, on this side of the equation, the assets go down of $100. On this side of the equation, stockholders' equity goes down as well. Matter of fact, I like to think of it like this. Revenues are good. They increase stockholders' equity. Expenses are bad. They decrease stockholders' equity. Now, how about this one? We paid dividend of $30. Well, if we pay out cash, does cash go up or down? It goes down. And why do we pay the cash? Because we're distributing profits, and we do that through dividends. Okay, so dividends reduce equity, right? And we do that through retained earnings section. Now, if we summed all of these up, including our beginning balances, we notice that our accounting equation remains in balance, right? Our common stock of 2,600 plus a retained earnings of 320 equal assets of 2,920. In this case, we didn't have any accounts payable. All right, that's it for this video. We'll see you in the next one. Bye-bye now.